Welcome. We are waiting for Donna Patterson, our guest, to join us. She is our lender who's going to be talking about credit. Hey,
Hello, how are you?
I am good. How are you?
I'm good. Can you hear me?
I can. Perfect. So what I would like to do is have you introduce yourself, maybe how you got into lending, why you're in lending, why you love it, if you do.
I do.
Action, and then we can kind of delve into credit. And so for anybody who is here watching, the goal is for this to be pretty short and sweet. It's just to like get down to the brass tacks. What do we need to know about credit? And Donna is the expert. So yeah, a little intro, and then I've got a little story to tell, and we can go from there. So
Perfect. I'm Donna Patterson. The company that I work for is Guild Mortgage. Guild rocks. They help us so that we can successfully close mortgages for people. I've been in the business my whole life. It's the only job I've ever had, and I madly love it. My favorite part is helping people buy houses and the financial the success that comes after that, and it just delights me. So I should know most things mortgage, and if not, I can find out.
and I can attest to that. The wonderful thing about Donna is that I feel like she's legitimately one of those people that there are no stupid questions, because I ask her all the time questions that I think are stupid, and she always has answers, and she's always a cheerleader, and it's like, it's always okay. So you always feel good talking to her about it. So the story that I want to tell is Donna and I had a client a little while ago who came to us, and he was like, I'm ready to buy a house. I finally have paid off all of my credit cards. I paid off my car, closed all my accounts, and I'm so psyched. I'm ready to do the next step. Like, I'm a financially independent person. And Donna and I both kind of, that doesn't work, because the way that our world is set up is you have to have credit. You have to have credit cards. And so, Donna, I would love for you to talk a little bit about kind of the history of credit and how credit kind of rules our world today, and give a general theme, and then we can get into like why it's important, how to get it, how to lose it, etc.
Perfect. So credit is basically, it determines your ability to borrow money. And so so what happens is when we look at approving somebody, we look at their credit worthiness. And that credit worthiness is defined primarily by your credit score. And the only way that you can obtain a credit score is by having credit. Um, and so to establish credit, there's some really, really basic things that you have to do. The general rule of thumb is you need to have at least one open credit line. And what happens is as you enter into this agreement to repay the money and you repay it on time, then that lender reports to the three credit bureaus and says, this person's responsible, they make their payments, they have low usage, and then the net result of that is you end up with a very high credit score. So the primary factors that go into credit is, the first thing is, as Annie says, you have to have credit. And then you have to use it. So ideally, you will pay it off every month. And if you have credit and you pay it off and you leave it open, then that will yield the highest score that you can have. Traditionally, you want to minimize the amount of credit that you have. Having 10 credit cards is not helpful. You need, one, maybe two. You got to get your Apple Cash, you got to get your Sky Miles. And throughout the history of that helps with credit and with establishing a credit score, which we will use to help you get a mortgage.
So that brings up a great question that I have. And by the way, for everybody who's here, if you have questions, just throw them in the comments there, and we can address them as we go. I think every time I talk to Donna, I learn something new. And so is there a sweet spot? So a good friend of mine joined and is watching, and her and I went out to dinner the other night, and we were talking about credit scores, because that's the kind of geeky person I am. And her a little higher than mine. And so I'm wondering, is there a sweet spot of credit? Like, you know, if you pay off your credit card on time and you do these things, 10 is too much. One you need to have, but is there a greater sweet spot? And are holding balance is better or paying off in full better? Maybe a little like that.
So that's an amazing question. So credit scores factor into three different things. They're going to look at the age of credit, right? So the quicker you can open an account, the better. So they're going to look at the length of time that you've had credit. So average age of the account. They're going to look at the type of credit. So ironically, a car loan that you repay the same amount over a fixed period of time, it's good, but it doesn't quite bump your score as like it would if it was, you know, every month you make the payment, that's excellent. So the biggest factors to super high credit scores are revolving credit, a credit card. And ideally, if you don't pay it off every month, you want to make sure that that balance is at least 30% of the total amount owed. So if you have a $3,000 credit card, you want to keep that reporting balance under $1,000. And if you can do that over, you know, I think two accounts, a car loan and a house, will give you that perfect sweet spot, which is really anything over a 740 credit score will help you get the very best mortgage, and it will help you get the very best mortgage insurance, all of these different things that are based on credit.
I love that. So that's a good segue into home buying stuff since we are home buying people. What are we looking at in terms of credit scores? And it's an easily Googleable thing, right? People
Yes.
what credit score they need, but how does it make a difference? So if you have a 740 versus a 640, maybe a little bit of explanation of where you need to be and where those, again, those like hot spots are of like, if I can get above here, then it's going to be good for this reason.
Yes. So I love this question. So the higher the credit score, the lower of a credit risk that you're considered to be. And so when you're looking at, for example, a conventional mortgage and you want to do a smaller down payment, which is very typical of a first-time home buyer. So let's say you do a 5% down payment. And so anytime you don't do 20% down, then you have to have private mortgage insurance. And the private mortgage insurance is 100% based on the credit score that you have. And the higher the credit score, the lower of a risk that you are considered to be. And so that cost factor goes down. So I pulled together some numbers and I was even shocked, Annie. I was like, what? So if you have a 740 or higher credit score, then on your, and I just picked a $450,000 purchase price with a 5% down payment. So the principal and interest is the portion of the payment that the interest rate is based on. And so at that score, you have the lowest interest rate and you have the lowest mortgage insurance. And so with a 740 credit score, the combination of that, of those two things was $1,834. It was just awesome. When I looked at a 640 credit score, that number went up to $2,358.
Oh,
And the reason for that was the rate was like a half a point higher, the interest rate. And so the principal and interest was higher. And then the mortgage insurance was like, this person might not make their payments, and so it's going to be this much a month.
oh.
So picking kind of a middle range, because 640 was pretty extreme. So let's say you're 700, like you have a decent score, you're still in a good range. At 700, the payment of those two pieces went to $1,986. So the point is if you can just get your score to 740, it will, you know, $150 a month is what that will translate into. And that's a lot of money over a 30-year mortgage.
For sure. Yeah,
Right?
I knew that it made a difference, but you're right. I didn't.
Yeah. Yeah. This is, you know, and we can we can help with credit counseling. We do credit planning all the time. Even if it's, you know, I don't have credit, what do I do? You know, there's a lot of different resources for that.
Yeah, so that's another great segue. That client that the whole thing kind of revolved around and gave me this idea to have this clinic or whatever we're calling these things. that client, I think, took maybe 6 or 8 months, if I remember correctly, from
Yes.
first spoke to them to the time when they purchased a house, and they do have a house now.
Yes.
You know, what did he do during that time? And what did you advise him on? How did he build that credit back up? And how did he get to where he needed to be able to do that?
So he was awesome because he really was very opposed to having debt because debt feels bad, right? Like, I don't want to owe anyone money. And so there's this very fine balance between, having a credit score, but then not owing anyone money. And so what he did is he went and applied to his bank, your bank or your credit union, whoever you have that banking relationship with, and he opened a credit card. And the advice is charge $10 and then pay it off. And then it reports to the 3 credit bureaus that says this person has 95% available credit and he paid his payment on time. And then he just did that and we monitored it. And as soon as the credit score became available, it was very high. And he bought a gorgeous house from you.
So one credit card, small.
One credit card for him.
Small.
Yes.
Of course,
yes.
It's got him to where he needed to be to buy a house.
Yes. So you don't have to have complicated credit, but you just don't want to have too many, and one tends to be enough to do what you need to.
Your credit cards don't have to look like mine.
Okay, but you have one, so good job.
I have several. I don't have 10. So we got to make a difference if your credit score is above 740. So like, what are the lines of demarcation for credit scores?
So ideally, anything from 740 up, you get about equivalent terms. Anything over 760 is considered excellent. And the bigger benefits to that is you're already getting the lowest mortgage insurance and you're already getting the lowest interest rate. It has a tendency to be very helpful with the approval process. We get a lot more waivers on income and things like that. That we don't, there's a lot of benefits to having that higher score just throughout the process.
Okay, great. Let's see. I think that those were our main questions, unless there's any other questions out there. And just so everybody knows, because people are going to come in and leave at different times, we're going to save this video and re-upload it again. So you'll be able to watch the whole thing and get all the answers. And truly, like, if there are follow-up questions even after this, stuff that we haven't touched on, Donna is totally available, and I'm and so we can get you answers either which way. Donna, is there anything else that you want to add that you think people to know about credit?
So the only other thing that I usually add when I'm talking about this is there's a couple of great places to go to just kind of monitor your credit. So you can kind of see what's out there, because because it's so important, it's important to know what's on it and what's currently out there. So there's a government website that's called annualcreditreport.com, and you can go on there and get a free copy of your credit report once a year. So it's not monthly, but once a year you can just be like, what's out there? Because you want to make sure that nothing negative happens to your credit, because that's also very damaging, and that helps with that. Experian.com allows you to sign up for credit monitoring. It's just one of the credit bureaus. And so that's kind of a very useful tool back to our client, just to kind of see what's happening with that score. And then the last one is Credit Karma. It's not perfect, but it gives you a really good idea of what's happening with your scores and also the balances that are being reported. We have people, sometimes people travel and they get really busy, and, it's just a really good thing to have an alert if something comes in that you're not aware of. So, and that's all.
That actually brings up another question for me. Maybe a little bit of explanation, because people ask me this all the time, and I feel like I don't always have a great answer for people. I always go, ask Donna, I don't know.
No.
But when you check people's credit, you pull a hard credit report. And these other things, so for instance, there's an app called Mint. Are you familiar with that?
Slightly.
Okay. A lot of people, and it's like an easy way to budget your money. So you can input all of your bank accounts and your credit card there, and you can check your credit score anytime on Mint. And I've always heard that you don't want to check your credit too much because that can also affect your credit. So then I'm wondering how some of these apps and things are giving you, even my bank, my Chase Bank gives me
Yeah.
for whenever I want it. So what is the difference between like being compulsive and checking your credit all the time to, and how does that affect your credit?
That's such a good question. So there's two types of ways to look at your credit. So you can get your credit score through your bank app or things like that. And usually they'll pick one of the three bureaus and that's the score that you'll see. So that just gives you a really good gauge of where that is and it doesn't impact you. It's like a soft look at credit, if you will, where it doesn't show up as an inquiry. You know, there's not really a credit decision that's being made on that. It's just information for you to have. I know insurance companies use that where it's not a hard pull. For us, and this goes back to, you know, the mortgage business is a little bit more behind. You know, we're a little slower to catch up to cool things like Mint. We have to pull credit scores from each of the bureaus. And so the reason that that's a hard inquiry is because you're actually going to go acquire a new debt. And that's the same with auto loans, home equity loans, mortgages. And so our rule is we have to have the inquiry and we use the middle of the three credit scores. So when you're doing your credit monitoring, it's really important to make sure that all of the people are reporting to the bureaus. Like you can go in and see what's on there. And so I think probably the biggest factor outside of having a good score is to make sure that you're watching it, and all of those sites are really good to give you that detail.
Got it. Okay. And then, okay, one final question, I think. Every more questions. I'm like, this will be short, you guys, don't worry, except for all people sometimes want to shop around for lenders in the process. Is how much is too much? And, you know, how will it affect their credit score once they've looked at too many lenders? I usually suggest like 2 or 3 max. But what is your recommendation for that?
Annie, that's such a good question. So the beautiful thing about credit is that when you're allowed to shop around, we want to make sure that you know that you're getting the best deal and you've had an opportunity to compare some different options. And so once within one 30-day period, if you have mortgage inquiries, they are all treated with the credit bureaus as though it's one inquiry. And that way you're not penalized for being like, well, you know, these guys say they can do this, but let me go check it out. And so I agree with 3, right? I think if you get farther than that, it becomes very confusing.
Yeah.
And then the hard rule on that is if you fall outside of a 30-day window, then it does show up as multiple inquiries. And that can hurt your credit from the standpoint is it looks like you're buying a lot of stuff. And so they're like, well, you know, did they buy 5 houses, right? They had their, you know, so you just, if you keep it within a 30-day period, which should give you enough time to shop, your mortgage approval is good for, ours is good for 4 months. And so it gives you time to just stay within that window without having to update it.
Okay.
Helpful?
We have someone else, sorry. I keep saying this. Okay. So the question is, are some people supposed to be at 850 forever? How can one get above 850? Or she meant 825, sorry. How do you get above 825? So how do you make credit?
So this is so beautiful. So I believe, and I might have to go check my facts on this. I believe that the highest credit score that you can get is 825. And I think that's kind of like you hit 100%. You can't be better. You can't be more awesome. The people that have scores that are actually at 825, in my experience, have 30 years of perfect credit without without a ding. And one day I would like to get there, but you know, again, if you're over 760, you know, look in your mirror and just be so proud of yourself.
Okay. Fair enough. All right. Well, I think that's it, Donna. Thank you so much.
Okay.
Wonderful.
Thank you too. I love this venue. I can't wait for the next one.
Yeah, and thanks for everyone who joined. You know, when you kind of put yourself out there like this, you don't know if people are going to come. And so I really appreciate everybody who came. And yeah, keep an eye out. I'll be uploading this video. And direct your friends towards it, because I think there's a lot of really great information in here. And so, yeah, thank you guys so much. Thanks, Donna.
Okay, thank you.
All right, see you.
Okay, bye.